hit a PR this summer. But 3 years ago, I was trading off a beat up Samsung monitor in my mom's basement, sitting in a chair I literally found out front of a sorority house. See this trade? SPY puts 101% in 30 minutes using 2 letters, L and E, levels and EMAs. While everyone else is out there with 15 indicators trying to predict the future, I'm making more in an hour than most people make in a month. But here's the crazy part. I used to be one of those traders. I lost $40,000 trading the market like my personal slot machine because I thought complexity meant more money. ICT, I'm looking at you. Then something changed. Someone told me a good trader is a good loser. Trading is like flipping a coin. Sometimes it lands tails 9 times in a row, and that's when you give up. But when you know the math is in your favor, you keep flipping. The Elliott model isn't sexy. It's not going to get you millions of followers on social media, but it is going to make you money consistently. It's like having a magic coin. Instead of 50-50, it's now 80-20. If you're tired of getting chopped up in this market, if you want to finally stop gambling and start trading like the institutions do, you need to understand these 2 letters. This is the Elliott model. This changes everything. Let's get into it. This is the easiest setup to replace your 9 to 5 or pay for a fancy vacation or pay your bills or whatever you want to do. This is by far the easiest setup. If you can master this, this is the only setup you need to trade for the rest of your life. All right, look, I get it. You probably tried millions of strategies at this point, multiple. You see some guy, he's popping on Twitter. You're like, I'm going to trade that strategy now. And then, oh, well, I saw this other guy, he made this much money. I'm going to try his strategy. And you're constantly bouncing around different strategies over and over again with absolutely no success. You've been at this for years, or maybe you're just starting. If you're just starting, luckily you're in the same place because I'm going to break this down in a simple way that you can start trading and making money way sooner than I did. Because when I was new, this was me. I was frustrated. I was doing this and I had all these different indicators and all this shenanigans. You don't need that. But here's the problem. Your charts are starting to look like this. It's starting to look like a little bit of hieroglyphics action. You got lines, you're tracking the hedge fund dollar flows and options flows and this, and you got this level here, and you got like 30 levels. It looks like a barcode on your screen. You got like 30 indicators. And here's the thing. People say, yo, Ellie, can you check out this trade? I'm like, sure. Send it to me. And they send it to me. I can't read what's going on. You got triangles on there. It's looking like the Illuminati. Like this is craziness. Craziness. Stop that. Stop that. You don't need any of that. So I want you to do something. I want you to close your eyes and I want you to go back for a minute. And this is on a serious note. I want you to really think about what was the reason you started trading. My reason I started trading is because everyone told me I couldn't do it. My biggest fear in life is I don't want to be like everyone else. So what did I do? I started trading stocks. Everyone told me I couldn't do it. For you, maybe you want to retire your family. You want to pay your bills. Maybe your wife works a lot and you want to, really support her. Whatever your reason why is, I want you to go back to that moment when you placed your first trade. The feeling you had, you were excited, the dreams of all the money you were going to make, all of this, success, the Lambos, the Rollies, or the big house, or whatever you wanted. And I guarantee the first trade you made worked. Why did it work? Because you didn't know anything. You were bright-eyed and bushy-tailed. You were like this guy here, fresh face, big smile. You were ready to take on the world because you didn't know anything. You think back when you were a baby. You didn't have any problems in the world. Why? Because everything was taken care of for you. And what happened? What happened to that? What happened to your why? What happened to that individual who first started trading? Maybe they took a few wrong turns. And today, we're going to fix that. Here's the problem. You can't even read your own charts. All right? I'm calling people out here. You can't read your own charts. You cannot tell me with confidence of what you're looking at. You can't tell me what anything means. You don't even know why you have all those indicators. You just saw some guy say this is a good indicator, so you added it to your trading view or your Webull or whatever. Half the lines are from some trader on social media. You've been trading for so long that you decided, hey, I'm just going to get every indicator and one of them is going to work. Here's the problem. You can tell me the GEX value on SPY, but you can't make any money. Like, cool. Like, that's a cool party trick. You'd be like, oh yeah, the GEX level today was crazy. Like, no one cares, dude. Like, if you're trading stocks, you got to make money. And that's what we're here to do. We're here to make money and cut out all the BS. If this sounds like you, please stick around because this video is literally who I'm making this for. It's going to be a little bit more gritty than the rest of them, but look, you got to stick around because I'm going to teach you a few things. And I promise you, you won't forget this lecture for the rest of your life. So what happened? I'll answer it for you. You lost part of yourself. You lost the simplicity. Remember back when you were a kid, life was all about riding bikes and not getting arrested. I'm kidding. Life was all about, eating snacks like, bagel bites or whatever it was. Whatever you were into when you were a kid, playing video games with the lads. You have lost part of your trading self. You did not keep it simple. You need to take all that knowledge you've learned and chuck it into the trash because you got to go back to basics. Without a solid fundamental basis, you will not make it in this game. So in this video, we're going to discuss high probability setups. We're going to talk about how to spot them, how to trade them, how to make money. And then once we're done, we're going to send a letter to your boss and tell him to kick rocks, pal, because you know what? You made it because you put in the work, because you realized that you have to dial it back a little bit, focus on the fundamentals, and then add things on top of it. But before I do that, comment down below. Are you enjoying the videos? Do you like the style? Anything you want me to cover? I mean, I'm really trying to make a movement here at this rate. I started started YouTube 3 months ago and it's blowing up. So let's run this up as high as possible. I will make as many videos as you want. Comment down below what you want me to cover, the who, the what, the where, the why. I'll cover it all for free. You already know. Okay, so every successful trader I know uses a simple strategy. Look, here's the thing. When you get to the level that I'm at, like I've been doing this for a long time, I know dudes who clear millions of dollars a year, millions, and they trade the simplest setup you've ever seen. Like I was even like, that's it, brother? And they were like, yeah. And I'm like, what the heck? And once I realized that, it really helped me kind of dial back. I'm like, maybe I'm kind of overdoing this whole thing. And what does it boil down to? Really what it boils down to is a clean market structure. All traders care about is trend. If you do not respect the trend, NGMI, you are not going to make it. What else do they care about? Entry, stop loss, the reward. Entry, where do I buy this stuff? Where do I stop out if I'm wrong? The reward, is there enough room for me to make money? That is it. That is all trading boils down to. Tricky part is this part in here because everyone has a different risk tolerance. Me, I can tolerate more risk than most people. Why? Because I'm like numb to it. I almost have like a calluses to it. That is why I can tolerate more risk. Other people, they can't tolerate that risk. So they have to adjust their profile differently. This is a discretionary part of trading. Remember, I know people who could take way more risk than me. They can trade 25 to 100 lots of SPX. Me, I can't do that because my hands will shake and I'll probably have a panic attack. However, that's you, go for it. Others, when they trade options, their hands get sweaty, they start freaking out, and they don't know what is going on. That is the discretionary part. That is the part, unfortunately, you're gonna have to figure out yourself. So what is market structure? Market structure is not fair value gaps or inverse fair value gaps. Okay, I don't know. Okay, this is just a bullish engulfing candle, and this is just, don't even get me started about this. It is not fair value gaps. It is not SMTs or POS 4.0s. Okay, and POS, I think it's a joke. I don't know if that's actually what it's called, but I know what POS stands for. I just don't know what it means in trading terms. What is actual market structure? Remember, in trading, our goal is to make things as complicated as possible. So we're gonna say, yeah, the market structure today was pretty gnarly, bruh. What does that mean? We're just talking about the daily candles. Are they trending up or are they trending down? That is all market structure is. Do not get confused and get into the weeds. Can you tell me, is it going up or is it going down? So I want to introduce you to someone. This is Chadagonia. Okay, so Chadagonia, his father founded the company Chadagonia. I'm not sure if you can kind of connect the two together and what I'm trying to do here. Chadagonia, he's a perma bull. He started trading right after the tariff news in April, and the market has gone up 30% since then, and he is the man. Okay, his strategy has been buy the dip. He's a swing trader. He's an options expert. He is everything all in one. He thinks PE ratio means gym class. He doesn't know what a PE ratio is. He still to this day talks about his high school football team. He threw 1 touchdown during their state championship. Oh, by the way, he's 35 now, and he still talks about that. Oh, and he also gets 0 girls. So in an uptrend, Chadagonia here is constantly pumping chest. Okay, summer's around the corner or summer's right here, and he's hitting chest every single day. Every single day, he's hitting chest, chest, chest. And what do I actually mean by that? He's buying the dip because the market is in a uptrend. Remember, in an uptrend, it means the daily candles are going from the lows to the highs. That is all an uptrend means. Okay, intraday, the price would look like this. This is an uptrend. Remember, Chadagonia, he's pumping chest every single day. But what happens when the trend breaks? Well, Chadagonia here, since he's been pumping chest for 10 days in a row, he starts to cramp up and the weight falls flat on his face. The hot gym girl has to come over, take the weight off him. He's absolutely mortified because he's been trying to hit up that girl in Instagram DMs for years now, and she's been absolutely ghosting him. But she has to be the one that comes over and takes the weight off. Why? Because all he did is hit chest 10 days in a row. But if anything, the stock market is a lot like fitness. Sometimes things just need a rest. Don't be a Chadagonia. You need to understand how price works. If you do not understand this concept, you are not going to make it in the trading game. Here we go. A bullish outside day. When I say a bullish outside day, I want you to think of Chadagonia pumping chest back-to-back days. Double chest day, okay? Chest day, Monday through Thursday, arms, Friday through Sunday. Easiest bro split you'll ever see. So remember, he's pumping chest. Okay? He's getting buffer and buffer. He's getting stronger and stronger until eventually he gets too tired, puts too much weight on, and that smoking hot gym girl has to come take the weight off him. And what happens on that day? We form a bearish outside day. So we can see we have the previous day high and the previous day low. The candle, the current candle, printing for the day is breaking below the previous day low, forming a bearish outside day. Remember, the market structure on a bearish outside day is bearish, so we are going to buy puts. So what happened? Let's talk about a real trade example. So Friday, this is how the market was looking pre-market. We can see it's below the previous day low. What does that tell us? Well, we think back to Chadagonia. Chadagonia is tired. The weight has fallen on his chest and he needs a break from the gym for a little bit to rest and and recover. So once you see that, your mind should already be thinking we're going short. There is no long here, okay? We are looking for A plus short entry based on what the market gives us. So what is our confirmation? Before you enter a trade, you need confirmation. Yes, just because we're below the previous day low does not mean we load up a bunch of puts off the open, okay? We need confirmation. What is our confirmation? So our confirmation, very simply, is the pre-market low. Remember what the pre-market low. The pre-market low, this area in here, is a low volume low for the overnight session. If you cannot break the pre-market low, the odds of chop are extremely high. Don't get involved in a choppy market. Remember, Chadagonia already has a weight on his chest. He's already down bad. All we need to do is use the pre-market low break as our confirmation to get short. And what happens? Puts went 100% in exactly 20 minutes. Very simple. 2 candles off the open. This is a 10-minute chart. Once it breaks the pre-market low, you get in and you short it. That is it. Remember, Chad's already tired. He's not buying the dip today because he's feeling a little sore after what happened yesterday, and we open lower. Price is just going to capitulate. Not capitulate. It's the wrong word. It's going to go down and to the right. It's going to be bearish just for the day. Doesn't mean that the overall market's not in an uptrend, etc. But as day traders, it is our job to take advantage of volatility intraday. That is our job, okay? Day traders, okay, I made this trade in 20 minutes. That is a day trade. So you want to be prepared for these opportunities intraday so you can tell your boss to kick rocks, pal. You may be asking yourself, is it really that simple? And the answer is yes, it's really that simple. Nothing I do or say has not been written about before. Nothing I do is unique. Nothing I do has, changed the game forever. For me, where my kind of strategy really lies is my ability to explain things to myself and to other people in a simple way that other people understand it, so that way they don't forget it. Remember, the more noise that you have that goes into your brain before making a trade, it's going to cause you to hesitate. If you're just like me, okay, Chadagonia, you're just like, all right, bro, we're below the previous day low. We break the pre-market low. I'm going to short it. That's it. And if you're wrong, you stop out. You don't get mad. You go, oh, that's just probability. So yes, trading is that simple. The problem is you have never seen it that way. You think it's this really complicated, like dark art witchcraft. In reality, it's just not. So in summary, a bullish outside day means Chad is getting buff. We are bullish. We're going to buy calls on this day. On an outside day that's bearish, meaning that we're breaking below the previous day low, he's tired. The weight is falling on his face and he's going to be embarrassed if he decides to buy calls. Remember, the market will always tell us our bias. We do not need to read economic reports on our free time to figure out the market is an uptrend or a downtrend. We do not need to do any of that. All we need is the candles on our screen to make a decision. The algos are making decisions off the candles on the screen. Everything in the stock market is based off of price action. It doesn't matter what you think. The market doesn't care about your feelings or some guy with a lot of followers on X's feelings. Okay, no one cares. It is just the candles on the screen. All a game of probability. Our job is to be on the right side of it. So what do? Say in our outside day or bearish outside day, all we're going to do is look for a break of a level for confirmation. If it's a bullish outside day, we wait for the pre-market highs to break. If it's bearish, we wait for the pre-market lows to break. That is it. The key is we wait for the break of the level. Okay, we do not front run said level. We do not get in before that level breaks. Why? So here's our level. Say this is the pre-market low. All right. And you're like, oh, well, we're below the previous day low, which is up here. So you're just like, I'm just going to buy puts. I'm so good at trading. And what happens? It bounces. Okay. So it's why you always want to wait for the level to break. Remember, the pre-market low is a low volume level. So if you cannot break a low volume level with volume, it's not going to happen. You're going to get chopped out and you're going to be like, Ellie, your strategy doesn't work. Okay. You got to wait for the level to break. Really simple. And lastly, we get paid. This is how we do it. Day in, day out. We keep it simple. We stack it up. And that is all I have for you today. The Chadagonia, the story of Chadagonia, how you can make 100% in 20 minutes using a bench press joke. That is all for me. I hope you have a wonderful night. Peace.